There's an old saying in the market, the best moves often happen when no one is looking. So get ready as we dive into 3 ASX stocks that aren't making headlines, but are quietly setting up for strong opportunities that could see their share prices skyrocket upwards. Backed by Australia's leading government accredited share trading education and supported by major media outlets Australia-wide, I'm Philip Tortevsky, joined by senior analyst Pedro Banales, and we are Wealth Within. Good evening, mate.
Good evening, Phil. Looking forward to uncovering some gems today.
Yeah, it's always nice. I thought today we could dive into, I guess, the unloved area of the market or where the light hasn't been shone over the last couple of weeks, because there are always amazing opportunities and it's often where you're not looking. So let's dive right into it and get into our first stock, which is Capral Limited. Now, Pedro, these 3 stocks, we'll go on the charts and have a good look at this one, because these 3 stocks, if you don't know them, it's because they're sitting outside the ASX 300. And, you know, given like they're sitting outside those that major index, they're probably not on the radar of a lot of people. And what I find interesting is when you look for these kinds of stocks, you know, getting really good ones out of this area of the market, as you know, is always much more tricky than trading the top end. But when you do find some gems, they have the real potential. And what I really like about this one here, Capral, I mean, we are in the midst of heightened you know, geopolitical issues and volatility. But right now, this stock's holding up really well. And it's important to, I guess, have a look at things like this when you are seeing the market really volatile, dumping at the moment. What stocks are actually holding up well? Which ones are bucking the trend? And, you know, Capral is actually one of the largest manufacturers, or Australia's largest manufacturer and distributor of aluminium extrusion products used in construction, transport, and industrial applications. Now, if we zoom this big picture out, I want to have a look at that on the monthly chart and just show you how Capral has changed through different periods. And it's important, I mean, our students will know this, as you know, Pedro, is identifying what stage we're in the cycle of this stock. And we've had really a really serious correction for a number of years. We get that often referred to as accumulation at the bottom, basing pattern, and now we're starting to break up. So this is where Capral gets really interesting for me. It's in very early stages of what could potentially be the mother of all turnarounds, and we're really respecting this momentum on the way up. You know, we've broken highs. If I just keep it to this current price action here, I think where it gets really interesting for me is how it holds above $10.50. It's been that level that it struggled through back in 2022, and you see 24 trying to find its feet through there. Again, it broke through, and then there were still question marks over a couple of months. Is it going to hold? Is there more value above? Then we get the pop. Now we've tested it. Last month was hugely bullish. We've had a bit of a sell-off in March, which is normal, but not so much compared to how February's run. And so I think now, as long as we hold on the other side of $10.20, support this momentum on the way up, I think really this stock has a chance at the next level to get somewhere, you know, challenge these highs back in around that $38 mark, or even somewhere in between 38 and 22. And if it does, you know, have that capacity, look at the upside. I mean, huge upside potential for this one, almost the chance to double, dare I say it, over the medium to longer term. So keep a very close eye on this. It's very simple for me. Hold $10 and set or 50 here, $10.60. This bullish move remains intact. Start breaking 10.50 and taking out this momentum line, then we change what the view is on this. But for now, breaking out in early trend, following a big period of accumulation, I think this one looks relatively healthy, and we are seeing some volume also support the moves on the way up. Look how little the volume was on this pullback through here. So I'm seeing, you know, the somewhat of potential, something big starting for this one if it can continue on the way it's going. Your thoughts, Pedro?
Oh, look, this one's looking beautiful, isn't it? It's a nice rise from that low back there in 2020. Now, going to the chart, I've just marked out this time period here, 9 years, from the low here of 2010 to when the stock actually started to trade up. And I wanted to highlight this because a lot of the students that come to us, you know, I sometimes ask them, you know, what are you trading? What are you buying? Why are you coming to us? And a lot of the time it's because they're losing money, obviously. And most of the time it's because they're investing in the wrong stocks. And they don't know how to, and I would say wrong stocks for their level of understanding. Because a lot of people would buy in around here, May 2011, thinking that it's gone up, only to find themselves, 50% down, and then holding, becoming a long-term shareholder basically, and you could be holding on to something like this for 9 years, basically doing nothing. And these type of stocks don't pay dividends either most of the time. So, it's a little bit of a dangerous game to be playing for a novice unless you know how to read a chart and know that the proper structures in place. So now is definitely the right time to be looking at this because, as they say, the trend is your friend. It is pointing up at the moment. It's doing all the right things. Its personality has changed. Look, this is looking really nice, and I hope that people and students as well have a look at these types of moves and realize that this is really the time to be looking at these and doing your analysis.
Yeah, it's a huge point you raise, mate, because not many people even, or I guess it's not spoken of much, whether it's thought of, but it's the opportunity cost of your money, right? 9 years is not a short time to be sitting in a stock. And imagine, you've got all your money, because it'd be nice if there was an unlimited capital, but the reality is most investors and traders have a limited set of capital. And so you want to put that to best use. And that's the power of charts. That really is the power of charts. It allows you to get that timing right. So you're not sitting in a stock for 9 years waiting for something to happen, but riding on when that moment is, when it's actually moving and getting things going, which is, I think, understated that point you made, Pedro. That's the benefit, isn't it, really? So you can really make that or maximize that capital rather than sitting in markets and watching, for example, the index run up, the US index run up, the Aussie index. Imagine being left behind, the psychology of it, and you probably see it more than I do with people, but the psychology of you sitting in a stock that's just accumulating, going sideways, and everything else is running and going strong. It forces you to some degree, get on that emotional side, and then that's when mistakes happen.
Yeah, that definitely is exactly what we see, and everybody goes through the same thing. It's something that can be fixed, not to worry, with a little bit of training, but something that happens nonetheless.
Yeah, for sure. Now, if you want to get a bit of an insight into how to get things right in terms of setting up a portfolio, avoiding those opportunistic or opportunity cost setups, getting stuck in stocks, check this book out. It's How to Beat the Managed Funds by 20%. It's free. You just have to pay the shipping. The link is in the description in this video. But as always, if you do want to take things serious and start doing the stuff we're doing here on the show to a much more advanced level, go and check out the website, wealthwithin.com.au. Look at the share trading courses, government accredited. There aren't too many out there, bar ours, I believe. But and also go and check out the testimonials and see what the students are actually doing at the moment, which is absolutely amazing. But let's move on, mate, to our next stock, which is Antipa Minerals. Now, we've got a few stocks for you today from all areas of the market, which is very exciting. The next one comes from the tech sector. And for me, quietly, this one looks very, very interesting. But did you want to have a look at AZY, Pedro, and take over that one, mate? Because it's getting to an interesting level, I think.
All right. So this next one is a Western Australian gold and copper exploration company focused on large-scale discoveries in the Paterson province. Now, what I like about this is that it's an actual proven company to be, successful in this space. It's been around for quite a long time. You can see that it first IPO'd back in 2011. So it's got a nice bit of history where you can start to back test and have a look at what happens in certain moves. And it looks quite cyclical as well. That's always, welcome when you're looking at a stock, because it gives you a high degree of probability as to what it's going to do next. And so let's have a look at the monthly chart here, expand it out a little bit. Now, we can see that it is above these previous highs here. Currently, it is trading below it a little bit, but it has managed to trade above it. And what I mean by that is that the price action is trading sideways around that 65 cents, which in the past was actually, it reversed quite heavily from that level, but now it's managing to maintain, it is promising at the moment. I would think that if this stock gets going, it has a potential to reach that $1.80 mark, and that's almost triple the amount that it is currently trading at. And it has the ability to have these sharp moves to the upside. But right now, I'm sure our students in Module 5 will be looking at that and being real interested at the moment as to what's happening. Let's expand that out to the weekly chart, and you can see that basically it's been range bound at the moment. The lower band of that range, I would say, sits at around that 55 cents. And then the upper band, where most of the price action is around that 75 cents. So we've got a bit of a 20-cent spread there where it's been kind of trailing sideways. any break above to the upside obviously is bullish, and any break to the downside, we could be looking at further downward momentum. Another thing that I've noticed about this is look at the bars, and maybe to the untrained eye, you guys might not see much difference in this, but as soon as you start looking at charts every single day, you start to notice how around this period here, the bars have actually changed. And of course, another thing that would allude to that is the big spike in volume. This basically means that the share is more liquid at the moment. It means that there's more buyers, more sellers. It's a bigger marketplace. So you don't have to worry about wanting to sell, but then there's no buyer on the other side. And that's a key thing that a lot of people miss, that there needs to be a buyer on the other side for you to be able to sell. So you don't want to be trading illiquid stocks. This has become quite liquid lately, and I really like that aspect of it. And look, at the moment, I would say that if it does bounce off that 55 cents, quite possibly that then we'll be heading back up to that 75 cents. But the real winner here is if it breaks above that 75 cents, because it has the potential to double or triple fold. So yeah, all in all, I think this one's looking real nice.
Yeah. And I mean, for me, I think what you mentioned, if we go to my chart, the main thing here is, the comment you made about the liquidity of the stock, because if you guys are thinking, hey, why are you guys looking at these stocks? When we get emails in from people, we sometimes say you're looking at the wrong stock. But these little nuances, identifying the liquidity, seeing when the character's changing, seeing when more money's coming in, seeing when the market's growing, these are all the little things. Again, if they're eye-opening to you, there's so much more that we put on this stuff and we teach to really show you, hey, am I doing this at the right time? And not only at the right time, but also growing, getting into companies that are on that growth phase. And so, just quickly for me, it's that level, like you said, 61. You've got to ask always with price action, is it different this time? It hasn't been in the past. So far, there is something different unfolding here. So that is the first clue. But, really watch this space and watch 61 cents, because that'll tell you everything about whether this one breaks out into full-blown expansion or this is going to be the cap like it's been over the last couple of months. But nevertheless, the last couple of years. But nevertheless, now's the time to look at it. It's going to be too late once it's already busted on out. If the break is to the upside and you're trying to chase it, at 120, 130, 140 as it's rapidly increasing, now is the time to put it on your watch list and keep a good look. But let's move on now for our third stock, which is FINEOS Corporation, code FCL. So on the charts now with FINEOS, this one here is an Irish-based software. It's in the tech space, quite interestingly. And, when we look at the majority of tech stocks that we do have, the bigger ones, they're absolutely getting demolished. And that's why it's so important when people do look at these sector analysis type stuff. I know a lot of people are doing that. They're going, oh, I find a good sector and I buy or sell stocks in that sector. But that can also be dangerous, because at the end of the day, you're trading stocks, and there'll always be stocks in underperforming sectors that are performing, and there'll always be stocks in performing sectors that are not performing. And if stocks is what you're trading at the end of the day, well, it's important to specify that opportunity, which you'd be surprised. Sometimes it comes from the worst sector on the market. And right now, this one is in the tech space. It's a cloud-based core systems for life, accident, and health insurance companies globally. And when I look at the chart, it's getting very interesting. Now, is this another potential start of a new expansion phase? Well, the probability starts to stack up and say, yeah, it might be, because we've got this really big downtrend that the stock's finally broken through. We've got a really strong basing out pattern. We've got the IPO price now that the stock listed at, and it's so common post-IPO stocks have that initial run based on the speculation. Then reality sets in. Then we find the true value of the company, and if it's good, it starts to grow. And so right now, that IPO price is the part that's really interesting, because that tells us whether buyers are willing to accept prices above that initial valuation. And so we've had few moments, if you see, almost exactly on that IPO price back in August 23 and May 25, where it rejected it straight away, whereby there was no value above. But things changed in August, September, October. We started to see closes above this level. Now we've pulled back, but what's interesting is if we can hold momentum now. And if we do that, potentially now is the time, and look at that, that's almost exactly, now is the time that this one should get going. So again, very simple outlook for me. If this can hold and start to break that $2.80 IPO price, close above, even better, take out the 334, then I think the continuation should be strong, and you could get a really nice run up to at least, you know, the 475 level. So, geez, a lot of these we're looking at, Pedro. We're looking at double the share price opportunity here, which is pretty cool. But yeah, I don't mind this one. I mean, on the weekly chart, obviously, it is a bit volatile. You know, you got to be mindful when stocks are at these major lows and starting to reverse early stages or even at tops. Look how, I guess, choppy price action can be. And given it is a little more illiquid relative to some of the higher cap stocks out there, you should expect a bit more volatility, a bit more erratic price action. And then maybe the argument is that you stick to the bigger timeframes like the monthly to give you the cleaner price action to be able to trade this without noise. But if you are skilled and experienced and you want to get into some more optimal levels of entry and exit, then I would say, you know, have a look at the weekly chart and potentially use this level as a marker for further upside, because again, in the short term, August, March, July, January, November, look how long this stock failed to find value above $2.21. Fast forward into late 25 and 26, bang, it's finding value above $2.21. Again, it's basing off that level. So this is the marker, $2.21 for me. As long as it's holding above there, this stock has the chance to go bullish, but boy, I would really like to see it get through 332, and then we can get pretty excited about further upside for this one. What are your thoughts, mate?
Well, what I like about this one is that it's a software company for the life insurance sector, and it's got high switching costs. So, you know, it's really hard for companies to switch away from these type of software. And I know that they're investing in AI and they're trying to move into the American market as well. So that's going to help with growth. That's a fundamental story anyway. Technically, I do agree with all of the levels that you've marked there. I'll just mark out some other interesting ones that I found. So around that $1.20, you know, 122, but you can round it off to 120. And really, when you see these type of patterns unfolding, as our students would know, it indicates something very interesting is happening. But let's have a look at what happens when I double this level. Say we go to $2.40. We can see that there is some price agreement there. So now let's double again and go to 360, and we can see that there are you know, some levels around there as well where it found some support in the past. So I just wanted to highlight that this stock does seem to move in those type of gradients, and right now we are at that $2.40. You know, you were a little bit more precise with your level here at around that $2.20, but you know, that $2.40, say, roughly seems to be a indicator that if it does break below this type of level, then, you know, we could be heading back down to that $1.20. But if we can hold above that, then at least I would expect upside to that $3.60, which is 50%. And then if we were to, you know, put an extra level up on the top to around that $4.80, so that's $1.20 again that we've added to that, and look what happens there. So that's another 100%, and that's roughly around that level that you've marked there, Phil, which represents about 100% upside as well. So there's definitely you know, more upside that could be had if it maintains this current level. Now on the weekly chart, at the moment it's struggling a little bit. It is pointing to the downside, but yeah, if it does hold that $2.20, which we will see after next week, because this week is pointing down. Actually, we're recording this on the Friday, so we'll see what happens in this coming week to see whether it can get above that $3.20. Yeah, sorry, I'm a bit confused about the days now.
No, it's okay. You're right. It's important to note that we are recording this on the Friday. We normally record on the Monday, but it is a public holiday. So if you want more from us, check out our video, Best ASX Oil Stocks to Buy in March, Iran War Madness.